Some potential home buyers may have gone through a rough time and had to resort to a short sale or a foreclosure. Short sales and foreclosures are both options for homeowners who want to sell their home but have fallen behind on their mortgage payments. Let's look at the difference between a short sale and a foreclosure and how to tell which option may be best for you if you find yourself in that position. First, let's identify what a short sale is and what a foreclosure is. So a short sale happens when a homeowner owes more on the mortgage than the market value of the home at the point they want to sell. Essentially, the homeowner is asking the bank to accept a lesser amount than the total mortgage owed. So if a homeowner is short on paying the lender back, that's a short sale. It's not recommended that first-time home buyers seek out short sales. First-time homebuyers may get very frustrated with the extra paperwork and the long negotiation waits if they're looking to get into a home right away. A foreclosure, on the other hand, happens when a homeowner, a borrower, is unable to make mortgage payments for a significant period of time, like 3 to 6 months of missed payments. The lender will then initiate a notice to the homeowner to let them know that they are at risk of a foreclosure. If the homeowner doesn't recoup their debt, either through the short sale or paying the mortgage balance that they owe, the lenders will step in and foreclose on the property. Unfortunately for buyers seeking to buy foreclosed homes at a bargain, they may have to pay in cash if no traditional loans will be granted for the foreclosure. Additionally, foreclosed homes are not able to be inspected for structural problems, mold, infestation, or other issues that they may have. So while a foreclosed home may sound like a good deal, it can come with some risks. Short sales and foreclosures are both financial options for homeowners who find themselves in financial distress, so they are similar in that way. Both also have a negative impact on your taxes, your credit score, and your credit report, and any future prospects of getting a loan. Not that you can never get another home loan for a short sale or bankruptcy, but there are waiting periods of 2 to 4 years in some cases, depending on the loan type. Timing is a large difference between a short sale and a foreclosure. Short sales can take up to 1 year to close, while foreclosures generally move a little faster since the lender is looking to recover the money that they're owed. Also, while both short sales and foreclosures have impacts on your credit, short sales are less damaging. A lot of times, people who sell their homes via short sale can usually get approved by some lenders to buy another home without having to wait. Foreclosures stay on your credit report for 7 years, and buyers have to wait 4 years before buying another home. There are some exceptions to these waiting periods based on the chapter of bankruptcy that was filed and your credit situation. If you have gone through a short sale or foreclosure process and some time has passed, you may still be able to get into homeownership. So reach out to me and let me see how I can assist you. I have a reputable credit repair partner and over 50 lending partners to work with.